I'm Greg Vanel. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights to help boost your trading potential. Coming up, the S&P 500, the NASDAQ have both climbed to fresh all-time highs. But are the technicals pointing to an overbought market that perhaps is set for a pullback? We're going to take a deeper dive in today's technical take. Meanwhile, the busy earnings season is in full swing. Market giants like Apple, Amazon, Meta, all on deck to report results. And of course, they could move the market. Microsoft is also on deck with its earnings, and it's our stock in the spotlight on this week's Trading Debating. The trader debaters are standing by with the bull and bear cases, ready to break down what it means for stakeholders. That's a lot to get to, so let's get to it. And don't forget to like and subscribe. You're watching TD Active Trader Live. A lot to talk about in the markets. The busiest week for the S&P 500 reporting issuers. Right now, you got some modest green on the screen for the S&P 500. Let's jump into the heat map. I want to see where the strength is and where some of the weakness is. I'll take you to the weakness first. United Health sort of shocking the market today with their forecast, and you're seeing a lot of the healthcare names as well under pressure along with it. But you got some of these tech players that are going to be reporting later. Microsoft will be debating just in a short period of time, about 0.5%. Nvidia, Google, Oracle, Broadcom, all showing a little bit of strength. That's enough to keep us in the green. We do have a crush of earnings. I want to show you Novo Nordisk, down about 20% at this hour. This is the ADR in New York. Of course, they're a Danish pharmaceutical giant, cutting their full-year sales and profit forecast. You're saying, why do I know this name? Well, the Wegovy weight loss drug, Ozempic, the diabetes treatment, familiar with those? They're actually warning about some challenges there on the sales front. When it comes to the weight loss drug in particular, Novo says it's seeing slower than expected market expansion and competition, and that's that drop-off result right there on the edge of the screen. You can see with a 20% pullback. Now, Boeing in the pre-market was showing some modest strength. Its fortunes have reversed. I think we're still waiting for the call with the senior executives in about half an hour's time. They slashed their quarterly losses. Sales actually jumped after they delivered the most airplanes since 2018. The aerospace giant lost $176 million in the 3 months. That's down from over $1 billion at the same period last year. The new CEO saying that it could be a turnaround year, so it did have a bit of movement in the pre-market. But right now at the open, investors are thinking something differently. We'll see what happens at around 10:30 when that earnings call starts as well. And that's your market update. Joining us now for a more technical take on what's happening in the markets, here in Amin and Jason Natick from our Direct Investing educational team. Welcome to the program, guys.
Good to be here.
And I don't want to spoil the ending, but this might be the last time people see us until after Labor Day. We'll tell you more about that afterward.
Yeah,
but we're going to have a great show today. I'm calling this our season finale. What do we got for the people?
All right, we're starting with S&P 500, Greg, of course. We'll be looking at that. This marks the busiest week of the second quarter earnings season. Roughly about 150 S&P companies will be reporting this week, including 4 of the Mag 7. We had 2 last week. We got 4. We've got 1 outstanding in Nvidia, which will come later on. This represents about 11.3 trillion combined market value. So it's going to be a big there's going to be volatility is the flavor of the week, what we're going to see here. I just wanted to unpack some stats related to this earnings as well, related to the S&P 500. One of the things I wanted to mention was, so far, things have unpacked fairly well. We've seen about 80% of the companies beating EPS estimates and just shy of 80% on the top line number on the revenue as well. So they've come out of this relatively unscathed. Now, keep in mind, a lot of them had lower guidance coming into this quarter. So that's probably, it's not like all sunshine and roses when it comes to it.
Put the bar here, and sometimes you jump over
and then you just bump over.
Like,
as the motto goes, under promise, over deliver. So that's what's happening over here. We've got the other thing I wanted to look at, to the question we're asking, and all investors are asking, are we overbought? Where is it going to go from here? I wanted to look at a fundamental number first before I go into the charts here, and that was there's a Cape-Shiller PE ratio, which is the combined PE of the S&P 500 companies. That currently stands at 38.97. This is the second highest level it's reached in the last over 3 decades. And the highest level, it was back in November of 1999 when it was at 43.77. So from that by admission, Yes, we're in an overbought zone. 12-month or 10-year average is about 18.4. The 30-year average sits at 17. So we're quite a distance away from it. But the big thing that's also going to be in focus is the energy sector as well. We've got ExxonMobil and Chevron reporting on Friday here. Energy is the largest year-over-year earnings decline on all of the 11 sectors of the S&P 500, and it's coming in about negative 24%, for Q2 2025. Mainly be pressured because of oil prices. Looking at the charts, though, we see that story kind of saying completely different, because we can see ever since the lows in April, we've started this rising channel here, and it's respected it. It's gone on a run. It's broken through previous supports. I've had to recreate these resistance and make them supports because it's making all-time highs. We're at the 6,400 now, which is the next level that it has to break through. We did see it kind of reject off of that for the last couple of days, but what we want to see if it's going to go up another leg is to break through the 64, retest it, and come back up. But right now, it is teetering on that lower bound of this rising channel, which it hasn't done so far. But the 21-day moving average, which is this yellow line, is going to act as that sort of intermediate support level that we're looking. So if it breaks that lower bound, it's the 21, which is looking about that 62.75 level right now. In terms of RSI, when we look for confirmations, although RSI has gone into overbought territory, hasn't done that for a while. What's positive about this? It's corroborating. It hasn't made lower highs. It is, in fact, still making higher highs, which is what you want to see when there's momentum building up in the price action here. And MACD is kind of supporting that. It hasn't turned a corner yet. So we're still seeing this very firmly coming out of this. We should see new highs still being hit over the next week and possibly the week after.
That is the big question for investors. Another big question has been tracking the U.S. dollar throughout this year. What are the charts telling you?
Yeah, the U.S. dollar's got it's on track for its best month of 2025. This is, of course, for those who are not aware, the DXY, dollar sign DXY is an index that measures the greenback against 6 major currency pairs across the world, and the euro is the more heavily weighted out of that basket there. It kicked off a pivotal week this week on the backs of some really strong economic news. The U.S. and the EU tariff bolstered hopes, and U.S. and China discussing possibly doing their extension on the tariffs. And Trump dubbed the U.S.-EU deal as the biggest deal ever made. So that came out at 15% tariffs, and then the big part of that was the EU was going to commit to spending about $750 billion over 3 years to buy liquefied natural gas from the U.S. So it helps. Ursula von der Leyen was on Trump's Turnberry golf course, so maybe the tee-off did help and finally scored a deal. That's what you need. Now, what we've also seen is, in the backs of this, when we have a rising U.S. dollar, which is great. We've seen it on this charts. If I bring it up right now, we saw it just kind of break below the 100 level. It was sitting below this 98.25, which I marked as now support. But it also formed this pattern that we like to see in technicals, and that's the inverse head and shoulders, which is a bullish move signal that's going to happen. Now, we just saw the breakthrough. We saw the big move up yesterday that pushed it right at the neckline of this formation, and then today we see another bid up happening, maybe on its way back to recapture that 100 level that we're looking for. So the key thing to know for investors, though, as the dollar strengthens over here, what that could mean potentially is it could pressure gold. It could also pressure cryptocurrencies as well, and even move into equity space as well. So I know we just talked about S&P making new highs, but as the gold rises, we should see that maybe causing some downward pressure on those equity baskets across the board there.
All right, SP 500, the U.S. buck, you have a company-specific chart you're going to look at, Block.
Yeah, we're looking at Block. So Block is the company behind the payment services Square, as well as their Cash App, which more focuses on kind of personal financing. Now, you were talking S&P 500. This is the newest entry onto the S&P 500. What do we know? When companies get added in, right, when rebalancing in terms of mutual funds and ETFs, these companies now need to get added on. A little quick side note, and we were discussing this the first time before the show, actually. Robinhood, that was the one that was speculated that many thought was going to be included. Well, guess what? It didn't get Block.
Saw what happened to their share price when you don't get included.
Yeah, exactly.
Right? It goes both ways.
It certainly go the other way. So that's the challenge of getting out in front of the news, right? Sometimes, right, if things don't go your way. But just some quick facts around the S&P 500 here. It's 15.8 billion minimum market cap to get yourself included on the index. You need to have positive earnings in the last quarter and positive net earnings over the previous year. It needs to be U.S. headquartered, actively traded, and listed on U.S. exchanges. Block meets all of those criteria. And just let's jump in and take a look at their chart. Now, their last couple earnings events, they've seen some big drops. You see, they've got some gaps noted on the chart. They've got earnings coming up next week. But since the last earnings, the company's been on quite the run here. We didn't plan it this way, but I've also identified a kind of an inverse head and shoulders for this particular as well. We've got the stock demonstrating kind of like an ascending triangle, which is also another bullish signal here. So the inverted head and shoulders here, it kind of didn't break out immediately above the triangle, but when it did break out, we've now kind of jumped up, filled in a gap from 2 earnings ago. So and we can see where it's even continued to move up after it was included on the S&P 500. So we've got some some positive trending news in terms of leading into earnings. But we want to see if those the last 2 kind of iterations of earnings is to tell. We'll see if there's kind of some wariness in the market and there could be room for pullback. So all ears next week on them.
All right, interesting stuff. Thanks for that, guys. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try out the TD Active Trader platform risk-free by opening a practice account. How do you do that? Click on that Try TD Active Trader button, and when you're ready to switch to a live account, simply export your workspace and start trading for real. The heart of the show. It is time for trading, debating, and the stock in the spotlight this week is Microsoft. Before we get going with the debate, just a reminder to our viewers that the securities and the strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors, and significant losses are possible. So it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now back to our stock of the hour, Microsoft. What made you guys pick this one to debate?
It's one of the
remember
Mag
a week
7s.
ago when we were talking
Yeah,
about it. What did we say?
Food,
what did we say?
Gears, yeah. What did we say there?
We needed something that wasn't food.
Yeah. No, we've switched gears. We're squarely focused back on the Mag 7. This company is far and away the leader in both enterprise operating systems and software, so we thought we'd put it to the test. I've got a little bit of a lyrical rhyme that our writer came up with. Microsoft's success seems like a sure thing, if you catch the pun. So with earnings that consistently excel.
A quip pulled straight out of the cloud.
Yeah. And it's hard to find an office that doesn't have a good outlook on the company. So why not? Let's put it together.
Heavy on the puns there today. Okay. But this is they're one of the OGs of the Mag 7 space, right? 25 years, in over the last 25 years, they've been kind of one of, if not one of, they've been many times the most valuable company by market cap. The first time they were the most valuable, it's almost quaint, even nostalgic. Less than 500 billion was their market cap back in 1999. Take a look at where they're at now. So that's they've certainly there's many times X's of that is where they're at right now. So
I'm old enough to remember the old DOS prompt and then being so excited when I got my Windows 3.1 on the little floppy disk to stick on my computer. So yeah. It's been quite a run. All right, let's get some time on the clock. You each have 2.5 minutes to make your case. Then we give you some time to counter. You draw from a hat as always. Herein is the bull. Why don't you kick things off?
All right. So let me just start by saying that, kind of alluding back to the DOS days, anyone who still thinks Microsoft is an office, just software provider, you're clearly living in the past, But I think we've all moved on from that idea now. It was the company that we know originally was founded by Bill Gates, which is now a technology conglomerate. Or as I like to call it, the Swiss Army knife of tech. And the only global big tech company that is transforming AI into the industrial engine. And that's what I'm going to hinge my bullish thesis on. Starting with the cloud dominance, we know that the intelligent cloud segment, which is one of their big segments, revenue drivers, I should say, the biggest revenue driver for Microsoft, which accounts for about 45%, is the biggest growth. We know Azure, which is their cloud provider, what they've dubbed, it's had double-digit growth to the tune of 33% and 22% on constant currency gains in Microsoft cloud revenues. Now, in a world where data is the new gold, Microsoft basically owns the pickaxes and the mines when it comes to it. They've got a 21% market share in cloud and growing. 95% of Fortune 500 companies utilize Microsoft Azure cloud adoption. and they've got 80 billion committed to capex spend for fiscal 2025 to build more worldwide data centers, and most of this investment's happening in the United States there as well. The other piece I'm going to talk about is the AI integration that they have. They've done huge investments, not only with their own infrastructure, but also partnering with large language models such as OpenAI. They've basically jammed AI into the entire tech stack when it comes from Office to GitHub to Azure. So really giving them the AI play for all their client base. And Microsoft Copilot is one of the largest players by market share. It's now smarter than your average bear, depending on your company, possibly your average intern. But I will say this: we love our interns in TD, and you guys are nothing but stellar there. And exactly. And now Copilot's already installed in 200,000 of the companies with average revenue per user accelerating there. Let's go to the charts and talk about that, because there's only one thing to show here. So looking at the charts, we saw this big breakout move with this big gap up starting in May from the last earnings. It started this new leg up, and it just went on a tear. Now the 21-day moving average is acting as its dynamic sort of support right now, and you can see the upper channel right now acting as a resistance. It's broken through the 518 level, which is a key pivotal movement that is doing. What you're also seeing on the RSI, though, is it's consistently staying above that 70 level. So we're not even in that oversold or overbought territory yet until we see a signal reversing back.
We are in the out of time.
All right, we are in the out of time.
Sure.
All your quips today, I picture like here in training for the show with like a headband and sweats and shit.
Yeah.
In the cloud, blah, 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 blah. Feeling strong now. We need like a little back behind the scenes video on that one. But it came out pretty strong out of the gate there with his bull case.
Sure did.
What's the bear thinking?
All right, I'm going to bring us back into the past. We're going to go back to 1998 because we're looking for not just pricing trends and fundamental trends. We're looking at other business, our overarching trends. What was one of the big stories back then was Microsoft and running afoul of the FTC with antitrust allegations surrounding. This was around their not supported platform around Internet Explorer. They were fined, and they've had many run-ins, but in this particular case, for the EU specifically, over $500 million back in 2013, which is almost $750 million in today's dollars. Let's fast forward back to today. The Azure program that you've spoke so elegantly about is now once again in the crosshairs of the FTC. What gives me pause is this was an investigation started under the Biden administration, is now continuing under the Trump administration. So this is not an environment of a lot of bipartisanship. So it sounds to me like we're getting a little foggy in the cloud there for sure. All right, but so antitrust. Another big thing is there's some things around antitrust around Teams and Office bundles that are deeming that Microsoft's using it as an unfair advantage, which is stifling innovation and competition. All right, so let's not leave Azure just yet. There's another big dark cloud that's out there. Microsoft seemingly just can't get out of their way in terms of cybersecurity, malware attacks, hacking. Sure, they've got partners that they've relied on that found backdoors in the program, but still, it's not a good look for them. Not a computer ninja by any stretch of the imagination. Even I've heard of some of these, like the CrowdStrike outages, the SolarWinds, supply chain breaches, even two ongoing high-profile breaches around the Department of Homeland Security and Health and Human Services in the States. So, all right, so those are just some big things that kind of give me pause, but let's jump into the chart so we can take a quick look. I've got a bit of a longer-term view here going on. Microsoft is continually, there's no getting around it. It's been making higher highs and higher lows along the way, but it's been consistently bouncing off the trend that I've got identified on the chart. So there's been points where there's been sell-offs, there's been profit taking, and sometimes trading is all about timing. The horizontal lines that I've got marked on the chart is where the RSI has achieved overbought, and when those situations have happened, we've seen pullbacks, we've seen consolidation in pricing. So we happen to be at one of those points right in now, and if we look into more of a short-term chart, we've been certainly true. We've been moving upwards, but we're now definitively over the overbought. We're looking to see if we can recede back into the regular part of the chart. And additionally, we're in the top end of that zone, the trend channel that we've been in. So there's definitely signs that the turnaround might be in the making.
The bell's stuck a little bit there. The reason why there's not going to be a show for a month is because they're going to do a lot of work on this. This is the technology at the heart of the show, and then we'll be ready for you on the other side of Labor. You guys, you really went for it there. That was spirited. I am excited now for 3 minutes of countering. Take it away here.
All right, I'm going to start with with FTC and all of that. You had to really dig deep and go back like almost 3 decades, Jake. So to really pull that one out.
If it sticks, it sticks, right?
Yeah. But in all fairness, with companies such as this, there's always going to be investigations opened up. But this is why they've partnered up with different different institutions, different security providers to, as they said, look for those sort of holes in their structure. The other thing I will say, like even to, not that it counts for anything, but let's say if they do get slapped with any of these, let's say, penalties, they've got enough of a cash flow to really absorb some of that. This is a company that really generates about 20.3 billion in quarterly cash flows. I mean, you're looking at about north of 80 billion usually per year. So there's obviously some reserves. A lot of that's going to be spent in the capex, and that is not something to balk at. They've got $315 billion in bookings, and as well committed for their projects. So
the cash can't be counted on to be there forever, and it's one of those things you can't buy yourself out of trouble. And one of the things that with Microsoft is, yes, they're well diversified, but they're reliant on like three core franchises, right? You've got your Outlook, you've got your Azure, and others as well. But when we think about this, it's not just all essentially roses. So we would think about money that they've spent in terms of like, let's do one example that they've struggled to integrate is like Activision Blizzard. That was over $75 billion worth of cost that they had to outlay. When we talk about rising costs, trends continue in terms of their operating expenses. That was up a sharp 12% last quarter to the tune of $1.6 billion. So that's extra cash coming in here.
Let me tell you something about that.
Okay.
So you talk about those expenses rising. So let's talk about operating cash flow, price to OCF, which is a metric that you want to look at. People will come at me and say PEs, it's overvalued. But if you look at their operating cash flow metric, it's about 26.01. Now this is a metric. It is the highest across the Mag 7 companies in terms of operating revenue, which they have, or operating margin, which stands at about 44.01%. So they've in fact expanded their operating margin. So despite these costs, they've been able to absorb it. They've gone away from like license sales to subscription models, and they've integrations, across the board. When it comes to gaming, they have the gaming pass, of course. So Activision is something that's part of the long-term strategy. The payout's already there, it's returning the generation.
Long-term as well is AI, right? We focused on AI at that integration, but what's not near term from an AI perspective is monetization. That's not something that's in the near term.
But that's where you're wrong. They're already monetizing it. We're away from the inference, the training period. Microsoft has integrated it. It's across 200,000 of its client-based customers right now.
Right,
and then it's going across the board with it.
Then the risk is that 2030 date with OpenAI, that ability to have that exclusivity is fast approaching. So there's opportunities, and then there might be clauses in the contract if OpenAI makes substantial advancements that.
But right now they're laughing because they've got OpenAI has about nine-figure commitment with the government, and 20% of that cut goes always to Microsoft right now.
That hurt me a little bit to stop. I think it's the best counter we've had on the show so far. You guys were flying there. I like that. I like it when you say people come at me with the PE. It's like, does that happen on the street? Do people come at you on the street and you say, check yourself before you wreck yourself, son, because I got some numbers here. Excellent stuff. All right, so now is our chance to jump into the Actor Trader platform, talk about some option strategies that could go along with these opinions that, of course, are not our own opinions, just pulled out of a hat. The bull. How could the bull possibly play this?
Yeah, I'm going to bring us back to the chart, Greg. And so looking at it, Microsoft is reaching this new zone. It's obviously hit new all-time highs. We're coming at the upper bound of this. And what I wanted to look at was there's a couple of things to just gauge where we think the move is going to happen. So I'm just going to change my view for a second here. So I've got the Fibonacci retracements, and you're actually able to invert these levels to be able to predict where the price could go based on its current sort of trajectory. So I do see a target range about further upside about that 550 level. Now the way the options are pricing it is there's about a $20 to $22 pricing move that's going to be on the cards right now coming into this earnings, which kind of puts us right in line with the strategy that I'm looking at. So the one that I have identified, you can see on the charts, we're going to be doing a long call butterfly spread trade. So essentially what it is, it's composed of three different parts on that on the strategy. We're looking to buy the $515 call. This is going out about the 19 September cycle there. We're looking to sell two of the 535 calls, which puts us right at kind of where the level we've mapped out where we could make the measured move. And then finally just buy a further one out to cap us on the risk side, the 555 call out there. Now this trade will essentially, if you're bullish, what you want to come into the eye with looking at volatility into earnings. Microsoft is on the lower end, so this is what kind of also made a decision. Help make my decision was that it might be conducive to being a net long buyer of options. And so this trade right now, based on what is bidding, would cost you just about $4 there. So that's $400 on the single contract. Your break-even price sits at $519, which if we see any outsized move, we could be still recouping our cost. So that's what we're kind of looking at. That break-even price at $519 is at least our line in the sand to start with there.
And by putting this strategy in play, what are you putting at risk?
So you're putting at risk what you paid for it, which is the $4, and that means that if the stock doesn't get or goes below $515, then you could potentially lose all of that. Now we do have some more time, which is what we have till September. So that's what we're looking at. On the reward side, it's simply just the spread. In this case, it's a $20 spread minus the cost, which is $4. So we're looking to make about $16. So you're pretty much going about 4x on the risk to reward scale over here if it works out.
Interesting potential play. How could a bear play this one, Jason?
All right, so like with the case we've laid out, there is Microsoft very well could be primed for a reversal. And let's jump into the chart so we can kind of talk through and visualize where our strike prices might be as well. We've already had a chance to kind of discuss RSI being overbought. So if we can see that confirmed back into the center, that would give us a signal. Also wanted to highlight the MACD. The MACD, while still in positive territory, one of the things I've noticed here is that there is a divergence. So the MACD is trending in the opposite direction of the stock itself. So that could be a forward-looking sentiment that the market could be playing in. We just had a recent cross of the MACD line over the signal line, so it's trading below. So if we're thinking about reversals, one way we could play that is through a bear put spread. Meaning this is a debit put spread where we're looking to go out and buy a out of the money put, and then in this case, because they can be quite expensive, and we also don't want to make sure that we can minimize our risk, is then selling a further out of the money put to bring in some premium to kind of offset that. We do have a capped gain. The gain is, in this case, I've drawn up buying the 505, selling the 495. So in this particular case, there's $10 worth of profit less the commission that's going to take us to, or not the commission, but the premium that's going to take us to buy it. In this case, it was around $4 when I did it. A little on the expensive side, but when I go back into the trading tab, because earnings are coming up this week, and looking at the today's option statistics, we actually are on still not quite really juicy in terms of the volatility. We're only at 19% in terms of the current IV percentile, meaning we are much closer to the IV lows. So there is potentially room for expansion. When you're long options, they will increase in value. So that could be a benefit to us if we can not only pick the direction, but also get more premium because from that volatility increase over the course of the next few days as well.
What do we need to be concerned about in this trade?
So in this particular trade, as I mentioned, we've got laid out a $10 wide spread. It's costing us around $4 to get into the trade. That's our max loss is going to be the cost to get into the spread, and then our max gain would be the difference between the width of our spread less the cost.
All right, fascinating stuff. Thanks for that, gentlemen. The bull and bear cases from Microsoft. Just a reminder to our viewers that this debate was for educational purposes and does not reflect our personal opinions about the stock. Now, before we move on, Jason, you're going to elaborate on the risk profile widget.
Yeah, we're going to talk the risk profile. We've used it from time to time on the show. I think it's a really wonderful tool. It's one of the things, especially for new people that are learning options, it helps you visualize kind of where your risk and reward is, how things are going to change over time, and it also allows us to input different factors. Like there's certain levers that you can pull on in the market that are going to affect your option premium. Changes in price, changes in time, and changes in volatility. Well, guess what? The risk profile shows that to you in a nice, easy package. And then beyond that, you even have the ability to compare existing positions with planned positions, so you get a whole portfolio level view when we're speaking about the symbol that you're trading your options on, and so it's a really neat tool. So I'll just stop talking about it. I want to actually show it to you on the screen here. So we've got we're on the trading tab. I've got my options order already down below. This is a spread that I'd considered doing for Microsoft. I've already toggled over the Analyze button in the bottom right-hand corner. That's gonna be a key first step. The Confirm and Send button changed to Analyze. Go ahead and click that through. My planned position has now been created. We're like inception levels of practice now. So we have a planned position in a practice account. So take that for what it's worth. But to find the risk profile, you're going to go over to the Analyze button at the top of the page. Up on the screen is the Earnings Analyzer. We took a look at that in last week's show. The risk profile is a sub-widget of that. All right, First, what we notice on the screen, down at the bottom, we happen to have two spreads that are going on. I happen to had just for visualization purposes, I had a long call spread. Well, guess what? That's just demonstrating that you can look at a portfolio of trades on the symbol. You have the ability to uncheck that, and so you can then focus in on one specific trade within the trade. So what we're looking at on the screen, there's a pink line and an orange line. The pink line is telling us the profit and loss scenario at expiration. The orange line is telling us as of a specific date. I can go ahead and change those dates to add another date so I can compare how this will change over time. And as well, up at the top of the screen, I mentioned those levers you can pull in the market. There's our volatility adjustment and our current price. So this is something that you can get your hands on. All you need to do is analyze a trade. We do have educational videos on the aptly named education tab, as well as on our YouTube page. So I know we went through this at pretty much warp speed, but just to know there is support that's out there, and this is a really great tool for not only understanding your risk reward, but if you want to learn and making sure that you're getting into the trade that matches your market sentiment, this is a tool that really can help.
That's what we call a teaser in the biz, right? You just whet the appetite for them now to go into the Education Center. Great stuff, Jay. If you have a question about the TD Active Trader platform, or if there's a stock you want to see our debaters go head-to-head on, just send us an email at td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It takes you to our TD Active Trader Live website. And if you can't join us live, be sure to visit over at the YouTube page. You can catch up on all the previous debates as well. Link is right there at the top. Can't think of something better to do than when you're on vacation. Maybe you're going away in August, you want to catch up on our previous debates. And if you're going to do all that, don't forget to like and subscribe. This is a busy week, as we said, the S&P 500 in terms of the amount of companies issuing corporate earnings. It is really the thick of it. There's a lot going on. It's not just about earnings whatsoever. We have a few things happening. I think you want to start on the macro front.
Yeah, let's talk about the macro front, Greg. We obviously had the August 1st deadline that's still looming. At this point, I don't think it's really an overhang for stocks based on what are the deals that have been worked out. And, obviously investors have seemingly moved on. And what they're going to squarely focus on now is starting today and tomorrow is FOMC. So the meeting's going to happen. Expectation largely is that the federal fund rates are going to remain unchanged between that 4.25% to 4.5% range. But of particular interest will be about the divisions within the FOMC, of course, playing out at this meeting with Fed governors, particularly Christopher Waller and Michelle Bowman, both really advocating for interest rate cuts. But expectation is really for Fed Chair Powell to stick to the script and say,
hold the line and maybe tee us up for September.
Exactly.
Maybe tee us up
September is where we're looking for it. The other thing that's also coming out of that is on Thursday we got PCE numbers and jobs on Friday. Those will be the two big market movers as well. So PCE, remember, is the preferred inflation gauge for the Fed to look at, and then jobs will be another thing to just that dual mandate that they have to serve purposes on. So we'll keep an eye on that. But apart from that, back to the equity side of things, I've got Apple that I've got squarely in my crosshairs. Another part of the $1 trillion club earnings that's going to be coming out tomorrow. Now, Apple, of course, we know a bulk of its revenue, or just a shade under 50%, is derived from iPhone sales. So coming into this earnings, there'll be a couple of particular things that will be investors want to keep an eye on. First is on the EPS side, they're looking at about $1.40 revenue in about the $90 billion territory. This is in the 1 to 4% range, but we want to look for iPhone demand. That's going to be the big thing. Most of Apple's products, iPhones, are made in China, and those margins could come in pressure with all the tariffs that have happened so far in this previous quarter. Apple shipped 10.1 million smartphones in this quarter that ended in June. They released this number ahead of time in China, which is its most critical markets. It's the first time, since it's actually got a 4% year-over-year growth since back in, Q4 2023. So that might be something buoying them up. But they did lose the top spot to competitor Huawei, who had about 12.1 million as well. So they lost that. The other thing to look at is they also announced that they've got $900 million in tariff-related cost increases in the June quarter results. That's going to be largely tied to these supply chain issues, policy shifts, et cetera, that'll be there. But then the other thing is the AI. They've been the one that's slowest out of the gates when it comes to AI integration, and they have Apple Intelligence, but it really hasn't brought any cheers about with the market. So wanting to probably see if there's any clear Gen AI strategy they've had in place or rollouts that are going to come out. On the technical side of things with the chart, we've seen it really go nowhere. We did see it kind of lag when you compare to the Max 7s. This resistance level, the 215, is the big line in the sand right now. We've seen it reject actually 4 times now, almost forming a double top, almost a triple top at a point where we saw the rejection happen here. It's come into it again. It rejected off of it this last week again. So 215 is going to be the real level to see if it can push up and maybe go back to that 225. It's nowhere near the highs that it previously hit, like at the beginning of the year in March. So this is the level to look at to see if it's either going to respect this downward trend. It did break through the downward trend, so there is some momentum there. And also the RSI is rising. It hasn't got into the overbought zone there, so this earnings is going to be key to see if it can break through that level. If it doesn't, we should see potentially a fall coming back down to that, close to that 200 level down.
Interesting stuff to keep an eye on. You keep an eye on a European healthcare company.
Yeah, so similar to kind of how you were speaking about Novo Nordisk at the start of the show, that sector had a firm spotlight on it from the administration, so maybe they were taking a bit of a sigh of relief after the European Union trade deal with around just the 15% tariffs. But all might not be, they might not be out of the woods yet. But basically, so Sanofi is what we're looking at. Global healthcare company based out of France. They've got a couple of really positive news stories come out for them recently. They've been awarded FDA and EU approvals for stem cell cancer cell treatment for patients with, now forgive me if I pronounce this wrong, multiple myeloma, I think is how we'll go with that one. So that's positive news from them. And also the recent positive clinical trial studies for that treats respiratory ailments for infants. So hey, let's cheer them on. Hopefully they have some good success there. But big news out of the company. This is announced before the trade deal, but the U.S. is obviously a big market for any drug maker. But for Sanofi specifically, 21.6 billion in sales last year alone, and they've also committed to investing up through 2020 or 2030 rather, $20 billion to increase manufacturing and research capabilities onshore in the U.S. So looking to see how that plays out. But jumping into their chart, there's been lots of ups and downs this year. We're more in a bit of a trough right now, as you can see here, lower highs and lower lows. We're approaching a key support level of $48. There's been a trend that's been supported on the way down. On the positive news and on the trade deal announcement, there was a gap up, but the stock price, the share price, didn't really seem to have a lot of conviction. So it didn't exceed that. Coming up to earnings this week, we'll be looking to see if we can pop above that. If the stock maintains its downward pressure, we could be looking in terms of the $45 price level, which it hasn't seen for the last 18 months to 2 years. So that could be in the offing. So one nice one, definitely keep an eye on for sure.
Lots of stuff to watch. And to throw one more on the pile, the Bank of Canada has a rate decision tomorrow morning as well. If you're watching us here on the Webroker platform, we'll have you well covered. My colleague Anthony Ocolia has got a few interviews lined up, talking with Andrew Kelvin in the noon hour show, which will be on the YouTube channel as well. So if you're a Bank of Canada fan, we got you covered there. Well, guys, that's the show for the week. I'm calling this the season finale. We're taking that little break. I want to say it's such a pleasure doing the show with you guys. I learn a lot. I have a great time. I'm going to miss you.
I'll miss you too, Greg. Yeah.
We're going to come back leaner and meaner after Labor Day, and we'll be back in action.
More bigger beards and stuff.
We might have bigger beards. You never know. I got 2 weeks off, and that's usually when I let it go. So this will be the test again for all going to be bearded men. We'll get together on a little chat near the end of the month. As always, at home, investors should perform their own due diligence before trading. Thanks for watching our program, and we'll see you in September.